Hey, how's it going, everyone? So today we are going to be taking a look at the portfolio, seeing how it's doing. As you can kind of see right over here on the screen right away, it is not looking so great here in the market. Now, the market overall has been going up and down like crazy. So let's talk about my portfolio, some of the things that are going on with it, and what I'm actually doing during this time period, because it is really tough for a lot of people to see their portfolio taking such massive hits. Not only just by the dollar amount with my portfolio, but I mean, even percentages, right? Like we're dropping large amounts, and some days there's actually times where the market is going up a lot as well too. So let's kind of take a look and see how things are going. I like to share, good and bad, how the portfolio is doing when individual stocks are not also doing well. But obviously, right now with everything, nothing is doing well for the most part. So, again, as you can see here, we're down about $4,000 for the day. If we switch over to the week, we're actually still about down almost the same. Earned a little bit of dividends right there, which is nice. And then if we go to the month right over here, we are looking at $8,400 down right now as of this recording. So you can see these dramatic swings up and dramatic swings down. And what's really cool when it comes to like sharing my portfolio and like how it's doing and what I'm investing in is that like you can see that I'm not just holding. I'm actually going to still be buying, and I'll show you in my activities feed here in just a little bit. So let's go to the quarter real quick and see how that's doing if it goes. We're actually down about 5,700, but we have earned about $170 in dividends, which is really nice. You can see we definitely have been putting in quite a bit more money, and I've actually mentioned this in videos prior to, is when the market is going down, I am buying more. When it tends to have like really big shots up, like 5% days, I kind of slow down on the buying at that time. Not that I don't think it's still worth it, especially with the market being as low as it is, but with all this fluctuation, I've been trying to at least have some cash on hand, so that way when the markets do have huge drops, I have a little bit of extra cash. So if we go to the 1 year marker, you can see we're actually down almost $3,000 for the year, which is insane to think about overall. And then if we go to our all time, we're still in the positive. Obviously not by as much as we would have been, just a couple months ago, but we're almost $3,000 in gains. We've actually earned $962 in dividends, so we're actually almost about to hit the $1,000 earned in dividends here very soon, which is exciting. I mean, granted, my portfolio is called Dividend Earnest, but yet I don't own all of my dividends in this portfolio, and some of the stocks here in this portfolio here definitely do not pay, especially in the growth here. They do not pay any dividends. But if you've been following the channel, you know that either I'm going to be selling these stocks in the future to earn those dividends, or if these companies do pay out dividends in the future, I'm buying them at hopefully a much better price point now for when they do get to that point. And then all the other stocks that I have, most of them are dividend growth focused and not necessarily that 3 to 4% that some people are looking at right now. Real quick though, if you are somebody who's interested in using M1 Finance, which is the platform I'm using here, I always have that link in the show notes down below. A lot of times they have a nice sign up bonus for using my link, but it also does help support out the channel, so you get more free content just like this. And if you want to see like setups like this and how I did this, I actually have a second channel where I share with people how to set up their M1 Finance account. I'll link that up in the show notes down below if you do end up wanting to sign up, or if you have M1 Finance and want to do something like this. Now, one of the things that we were talking about earlier is consistent investing regardless of how the market's doing. So I'm going to go into my activities feed, and we're going to actually, let's just break this down to deposits. So I just want to show you, like, I am kind of doing what I don't want to say that I tell people to do, because I don't tell anybody what to do with their money. It's not something I can do anyways, but that if I say, hey, I'm still buying in this market, you can see that's actually the truth here. So like May 4th, I deposited 500. On the 2nd, I did 300. This was from M1 Spend. I had money sitting in there, so that was a interest payout, which is really cool. And then April 28th, I did a huge amount, over $1,000, which I actually shared on my community tab. So if you have the community tab, you can see my deposits. I actually do it for channel members. If you want to ever check it out, you guys can check out the channel membership down below. I do all of my posts. So I just recently updated this one, which was my afternoon trade on May 5th. Put in $500 and I show you, what I am actually buying On the second, I did another purchase, and then that big $1,000 one, I actually shared it with everybody because that was actually a pretty massive deposit that I did, and it's really interesting to kind of go through that process of like doing a huge deposit in a time when the market is fluctuating so much, because you don't know if you're getting in at a good price point, or if the market is going to just keep on dropping, because then you put in that money and then it all of a sudden just keeps going down and down, and it's a little difficult at times to be able to go through that. But as you can see here, there's that form of consistency over and over again, and that helps when it comes to making sure that we're going to have a great opportunity to get out of this position when it comes to the market being so low, that when the market is doing very, very well, that we are going to continue to succeed. Because I think for a lot of people, when that market is down, obviously people do sell, which is not something you really want to be doing if you're already down on the position, but still believe in the company long term. But for me, I think that if I am holding now and that's all I do and not buy anything, I'll still be okay. But if I buy while the market is constantly dropping, then it's going to do even better for me. And I had an example of this a long time ago with Lockheed Martin. So I have Lockheed Martin here in my holdings, and this is actually one of the very few companies that's still very positive in my portfolio. You can see I'm still up, actually, let me go to my all-time. I'm still at $581, 66 of that has been earned dividends. But what's been really interesting about this is that there were time periods where Lockheed Martin was down overall. I think, let me go to this and actually show you guys right over here. So, can I zoom this in? Yeah. So like there were time periods where, it was just not doing very well around this area over here. Around, you could see here, it was like around $345. And I was buying it at this time period. And then once it started shooting back up and going around the 400s, I slowed down on my purchasing. And the reason for that is because I still believe in the company. I want to be buying at that lower price point. And then once it starts shooting up, I slow down on that purchase. So, and I've done that occasionally with a lot of other stocks here in the portfolio as well too, where when it's hitting its all-time highs, I tend to slow down, but then when it's going down and down, I will be purchasing more. So as of right now, I haven't been buying Lockheed Martin in quite some time. I can actually even break this down a little bit more. So you can see here, the last time I actually did a purchase for Lockheed was February 22nd, and that was for a price point of $389, and it was like 4 something right now, I think, right? Let's see, can this bring it up? Nope, that's not going to bring it up there. But yeah, it's much higher than it was back in even February. So I slowed down on that purchase. So then what am I putting my money into now? Well, you saw those the buys earlier. Let me reset this here. So this is an example of what I've been purchasing a lot more of as of recent. And funny enough, these are all pretty much companies that aren't paying dividends for the most part. So Amazon, Google, Facebook are 3 that I've been purchasing a lot of every single week. I've been doing a little bit more of Microsoft, but not a ton. You can see here I did $50 in comparison to like $100 in these other companies. And I've been doing a lot into Home Depot as well. That's been a big company. I started putting again a little bit more into Square just because the price point is really attractive at this point. For me, it was around $100 per share, I think. Look at all that. So right here, it was about 102. Obviously, with M1 Finance, I don't really have control of when it triggers. It has a certain time period when I do the deposit and that money goes through, which I know to some people they don't like that, but for me personally, I'm not trying to time the market at all. I just want to put my money in and not worry about it. So you could see here, so here's some more buys. Again, if you are a channel member at that aristocrat level, you'll actually get the updates in the community tab, so you can kind of just see along. I know to some people it actually kind of helps get them excited and encourages them to keep going, because in a market like this, when everything just keeps on falling, it's really hard to want to stay consistent and also want to be involved anymore, because then you're like, well, what am I actually doing here? But again, you can see with these like Amazon $100, Facebook $100, Google I put 125, and then Home Depot I did 48.67 on that one. That one had that like deposit from my interest account that came in, and that's where I put it with Home Depot. But you can see that that's being consistent, right? That is putting money in. This was the big purchase right over here in case you didn't get to see it all. So I did 100 in Tesla, $150 into Facebook, 150 into Microsoft. I did it a little bit into Ally because they kind of hit their 52-week low, and their numbers are still looking great. I think their Q1 stuff was looking pretty fantastic, so I decided to put a little bit more in. You could see here almost $300 into Google and $250 into Amazon. So those were really, really big purchases that I did. Again, I wasn't trying to time the market. I was just putting them in. This was back on April 28th. So let's see, like if we're going to Google, you can see their share price was 2,321. Obviously, this is pre-split, depending on when you're watching this, but that's, depending on, your interest and where you're trying to go, if that's a good price point for you. So let's go ahead and let me see if I could zoom out just a little bit here, just so you can get a little bit more of an idea. So like, let's go into Google. So you can see like with Google, their PE ratio now is 21:51, and things are still looking really solid for them across the board. Now, you can see obviously their debts have started going up, but their outstanding shares have gone down significantly, which is really nice. And then the earnings per share, let's actually bring this up here. So you can see their earnings per share, the most recent as of right now, obviously has gone down from the last quarter, but overall, it's still looking very healthy. And so for me, when it comes to that PE ratio right there, that is looking very attractive for me. Obviously it can still be going down for the foreseeable future with everything, with inflation, with interest rates going up. Everything can still have huge impacts. But again, I'm not trying to time this market because that's going to make it very, very difficult for me to try to say, oh, well, I'll just keep waiting until it gets under 2,000 or whatever. Because what happens if that doesn't become true? What happens if it just ends up going back up and having a really good rally? That could be the case. It might not be, but guess what? Dollar cost averaging is going to be the best way for me to go because I'm not trying to feel like I know where the market's going to go. Nobody ever knows where it's going to exactly go. But when the fundamentals look great and you believe in that company and you look at the books and everything else looks really solid across the board, why not buy in at a time that might be the most advantageous? That down the road, a lot of people are going to look back and be like, man, I wish I bought it at this price point. I hear that all the time, right? Like if we go back to right before the pandemic, where was it? It was about February-ish, right? So if you look at that, so back in February 18, 2020, it was sitting at $1,519, and some people would be like, man, I wish I can go back and just throw a bunch of money in there, right? Now, part of me wants to be like, oh, let's just throw a whole bunch of money into my portfolio because I do have some cash on hand right now. And so that's the difficult part is like, do I just take the money I have now and throw it into my portfolio, or do I wait so I can dollar cost average? Because if the market keeps going down, then that's going to give me buying opportunities here and here versus like, let me bring up my pen here. Like if I purchased right here a whole bunch of shares because I'm like, whoa, that's down from its all-time highs and everything, like that would have been a good time to buy. But then check it out, right now is an even better time to buy. So it's like me buying a little bit right over here. So I buy a little bit here and then I buy a little bit here and I'm still good. I'm dollar cost averaging, which helps me out, which I don't have to sit here and try to keep constantly thinking about the best time to buy, the best time to put in money. I just keep on staying consistent as best as possible. Now, quickly, before we move on, if you're somebody with student loans, one thing I do want you to check out is the link down below for Earnest. They can help you refinance your student loans, which is actually entirely for free in case you didn't know that. So if you do have some high interest, definitely check it out before interest rates keep on going up. It takes you about 2 minutes to check out your rates and see if you can lower them. And the best part is that extra money that you're going to be saving can be used towards investing or anything else that you want to do. And using that link helps support out the channel, but there's actually a nice little bonus for you for clicking that link. So let's go ahead and get back into this portion right over here so we can kind of talk a little bit more about what the ultimate goal is, right? Now, for this portfolio, I have it, again, nicknamed Dividend just because in the future, probably about like 14 years from now, give or take, is when I want to start utilizing the money in this account. I don't want to wait till retirement. I have a whole retirement account. If you guys check out some other videos on the channel, you will see those, account portfolios with Vanguard. So this one is really for, in about 14 years, I want to utilize this for anything that I want, whether it's for travel, whether it's for, whatever the case may be, most likely for travel. I won't lie. And I want to utilize the money that we earn in those dividends to be able to pay for that lifestyle, whether it's, being nomads or living a lavish, life on a yacht, which probably wouldn't be the case, but who knows? So what I want to do is be buying in now, not worrying about the dividend payouts right now, because I think the dividends in this account, let's go to my pies, because this will actually show us the percentage. And this is based off of my percentages and how much I have in all of my stocks. So you can see here, with 19 holdings, I have a dividend yield of 1.031%. Let me actually zoom in here just because we're back in M1 Finance. So this is obviously not a big yield, especially for the amount of money we have in the portfolio. So we're not getting paid out as much as, obviously getting 3-4% yields. But what is really important for me is the dividend growth and also even potential dividends for the future, right? Because I mentioned earlier that some of the companies I have, like, Google, Tesla, Amazon, Facebook, none of these companies pay out dividends. But if we go back to Seeking Alpha, obviously these are going to be hypothetical, so keep that in mind. But right now with Google, if they were to pay out, say 60%, which is kind of like that, bar that most companies try to stick around. I doubt they're going to do this anytime soon, but also Apple at one point didn't pay out dividends. If they paid out 60%, that would be a 2.77 yield as of right now, which would give you $68.01 every single year, which then if we took that 68.01 divided by 4, you'd be getting $17 every quarter per share that you have. And at this point, I believe, a little over 2 shares. Yeah, just a little over 2 shares, which obviously is not going to be a lot. It's not a huge payout. I can't live off of that stuff, but I'm thinking 14, 15 years in the future and how that's going to have an impact on me. And, as of right now, that's a low number. But then for companies that do increase their dividend or have dividends and then increase them, that's also a big factor as well, too. So let's go into something like Home Depot, for example. So Home Depot, let's go to their dividend news and kind of read off of this. So here's an example of dividend growth that I look for, right? So dividend growth here for Home Depot and their most recent increase was 15%, which is better than what inflation has been as of late, which is great because that means my money is worth more than what inflation is. Because if you're getting an increase of dividends at like 2% and inflation is 3, 4, or even at the current time like 8%, your actual payouts are worth less than they were the year before because of those increases being way less. So here's that example of getting paid $1.65 per share that you have of Home Depot, and then them, without having to do anything else besides holding on to the funds, you're now getting $1.90 per share. So that's a pretty massive increase for you for having done nothing. So if that company continues to do that year after year, maybe not exactly at 15%, but if they stick around to a certain degree, that's going to have a huge impact. So let's go to the dividend yield and kind of break that down and see how that's going to play out. So obviously these are things that have happened, so it's no guarantee that it's going to happen again. But this is in a 10-year track. So if you had bought, the way this kind of works is actually from left to right, or from right to left. So it's kind of an interesting graph. But let's say what happened in the last 10 years will happen again in the next 10 years as far as Home Depot increasing their dividends, right? That's not going to be the exact case, but let's just play that out. So somebody buying today, give or take, their dividend yield is around 2.41%. You saw that there. Yeah, 2.41%. If you bought today, so let's say you put like $10,000 in, 20,000, whatever you can, or obviously like I did, just small amounts over time. But let's just say that, right? In 10 years, with all the dividend increases, check this out, you would, theoretically, if everything stayed the same in 10 years, getting a yield on cost of 14.63%. So what does that mean? Well, that means that without having invested anything more into it, but because they increase their dividends every year, that money that you put in originally is now paying you out annually 14% of what you originally put into it, which is really great. I mean, I don't know about you, but I like a 14% return on my money having done nothing, right? I mean, there's other ways to invest and get better returns, but if you want to kind of just stay steady and not have to like worry about that kind of stuff, that's a huge dividend yield to be actually considering. Obviously, if you're buying throughout that same time period, so if obviously you're buying all these times here, it's going to lower if the the dividend yield is low at the time that you're buying. So that's not to say buy it once and then wait the 10 years, right? That wouldn't make any sense because we're trying to dollar cost average here. I mean, unless you got like, $100,000 to put in today, and then in 10 years, if everything stayed similar, I mean, that would be huge. But that's not going to be the case, right? For most people, you're going to be putting in small dollar amounts. I mean, even with Home Depot as an example, so let's go back to holdings. Actually, like I mentioned, I've been buying a lot of Home Depot. You can see here May 4th, May 2nd, April 25th, April 22nd, April 18th, 12th, 11th. I've been tossing in a healthy amount into Home Depot. So, I've been buying at 312, 302, 300. And the reason I'm showing this again is because I'm not worried about what the price is today. As long as I see the fundamentals of the company, and everything is looking solid, right? Then I'm just going to keep buying. Maybe it is a little overpriced. Maybe it's a little underpriced. Obviously, look at the numbers, make that for yourself. Let me actually zoom out here just a little bit. Those are going to be up to you, and at the end of the day, your decisions to make. But, when you look at companies and things are looking pretty solid, obviously when you look at like cash flow, obviously cash flow kind of goes up and down a little bit, but when they have free cash flow, that really helps out. You can see their dividend is just consistently going up. Like, look at this. This is incredible. Like, can you imagine having bought Home Depot stock in early 2000 and getting paid out 4 cents a share, and you're like, based off that price point, it's not that great. But holding onto that stock for 22 plus years, and you're getting $1.90 per share, and you might have at that point maybe hundreds, if not thousands of shares, that'd be really nice. But that's kind of what we look at. If those things make sense and it works and it fits within our goal, then I'm going to keep buying, especially when it's at its 52-week low, or sometimes even at their all-time lows over like a certain period of time. Like, it's really important to kind of pay attention to that. And I'm pretty sure, did Home Depot actually say they're doing buybacks? Let me go see if they're doing buybacks, because then that obviously helps increase the value of all of my shares. I don't know if they're doing buybacks. Maybe not. But nonetheless, those are kind of the things. Obviously, they are buying back their shares, and you can see here it's significant over the last couple of years. As long as that's going down, that's even better for me. More value for each share that I already currently own, which for me, I think I'm at close to 20 shares of Home Depot. Yeah, I'm like right on the cusp of 20 shares, which is really cool. Like, it's not obviously the most in the world. You can see here, I'm actually currently down. If you don't include the dividends, I'm currently down on Home Depot by about 3.38%. I got the current values about $6,000. And then I have an average price of $309.18. But you saw earlier when I was buying, I didn't care if it was above or below. And if it starts going way below, like if Home Depot goes to, I don't know, 200, I'd probably start throwing even more money than I already have in the last couple of months. But if all of a sudden they just skyrocket way beyond, like to 450, I'd probably slow down, because at that point, some of those numbers like the PE ratio and stuff like that would start looking a little bit rich, in my opinion. So I would just slow down in comparison to being able to invest in other companies I have in the portfolio, because that's kind of the way I like to look at it is, where would my money in this current time period be most valuable in my portfolio? If I go to Seeking Alpha, let me go back to this here and zoom in. Yeah, perfect. Okay. So they have this 52-week range, which I absolutely love, because it gives me a quick insight on which of my companies that I already have should I be going through and doing a little bit more of a deep dive into on, is this going to be the company I want to be putting a lot more into in this time period, right? So with this 52 weeks, you can see the further left it is, the closer it is to its 52-week low. The more to the right it is, the closer it is to its 52-week high. And then obviously in the middle, kind of mid-range. So you can see companies like Amazon, 52-week low. You got Google, very close to its 52-week low. Home Depot has been kind of here for the last few weeks. NextEra Energy just dropped to that. Square's been at its 52-week low. So a lot of these companies, I've just been like, okay, well, they're kind of down here. Let's take a look at them. Are these worth putting that extra money into? Do I still believe in the fundamentals of these companies? Are they going in the right path? Obviously, looking at their quarterlies. One really cool thing with Seeking Alpha, I'm not sponsored by them by no means, but if they want to, I'd be totally happy. But one of the things I like the most is that with these companies, I have them in my portfolio. So if I scroll towards the bottom here, you can see these tabs right here. So you can see like latest news, all the articles, all the transcripts for the companies that are in my portfolio exclusively. So I don't have to go searching for them. They're all here. I still have to actually go through these. I just got back from vacation. So I got to still go through all of these right over here. I tried to listen to some on my way back home. Didn't really work out well, but what I can do is I can sit here and I can go through, all the Q1 results for the companies that have, released that information, and especially for the ones that are at those 52-week lows, because that's going to give me that insight of saying, yes, this is where I want to be throwing in my extra money. And then almost the same is true for the opposite direction, right? So like we talked about Lockheed Martin, they're, as of right now, Lockheed Martin and NRZ are, I think, the two closest to their 52-week highs. I know Costco was up there at one point, but it's definitely starting to drop a little bit, and my circle is nowhere close to it. But right over here, like these three companies were close or are close to their 52-week highs in comparison to everybody else. So I'm looking at these companies and I'm like, I can hold off on them for now because I'm not going to be buying them at their highest points, knowing that there's a good possibility that they might be coming down, especially with the whole market getting tugged down as well too. So I'd rather buy into the companies that might bring me more value in the terms, or more value now than if I waited a little bit longer, because who knows if they're going to go back up. And again, if they keep going down, I'm going to keep on buying more of those. Now, as I mentioned earlier, if you are somebody who's wants to subscribe to the channel membership, I will post every single time I do buys or sells. I don't really sell too often, but you guys can check those out as well. It does help support out the channel because I do everything here for free, so it doesn't cost you anything to be like watching or hanging out. But if you want to kind of go that extra step, that does help support me out as well. And then what I'm going to also do too is have this right over here for you. This is going to be another video for you, so you can kind of learn and grow when it comes to compounding your money for the long term and help you make more money. My name is Dennis, and I'll see you in that next video.